give everybody just a minute to log in here. So I'm Marjorie Adams. I'm the CEO of Fourlane. Can I apologize for the head cold today? If I sound funny, I'm going to try to push through. I'm going to try to get to that mute button if I have to cough at all. So this week we're going to be talking about stated costs in manufacturing. So I don't want anybody to ever take any one of these courses as, oh, it's a manufacturing course, so I need to log off. This does not apply to me. It's not true. We have people who use these features in other areas, right? So maybe they don't do kind of manufacturing for output, like meaning sending out to clients, but they do some compilation of things internally, like a new employee onboarding kit, right? We also have some people who do services, like they go out to trade shows. So they want to compile, gather, prepare, get things together. And I've seen assemblies used outside of true manufacturing. The other side of this too, and when we talk about manufacturing, is there is a lot of debate kind of internally we talk about here around what is a true manufacturer, right? Because of course, if you can not have to deal with components, not have to deal with the labor of assembly, not have to deal with machining costs, you know, the templates for machining. If you don't have to deal with any of those pieces, are you a manufacturing company? Now, you did have to create that process at some point, right? But if your company's not responsible for completing the work, so it's that we talk about a lot too. Some of our clients will say, I'm a manufacturing company, and then we say, do you purchase the components that go into your builds? And they say no. And those are fun because those are easier. For the people who are responsible for the labor and the assembling and maybe outsourcing piece of it, which will be a future class, it's a lot of work. A lot more tracking that we're responsible for. All right, so we're going to be talking about stated costs in manufacturing. So one thing I wanted to start off with, too, is understanding, because manufacturing, obviously, I mean, it would be great if it was a single-step process. I just have this component and I have that component. I put them those two together. Very little labor, labors and material costs. No actual machining. So that would be a very simple, assembly possibly that could happen. But what we have a lot of times, we have clients come to us asking us for shop floor tracking. We hear this a lot. Multiple level bombs, multiple level bill of materials. I have to do multiple steps in getting to that finished good. And so I thought I'd touch on this a little bit before we get into the stated costs, because it's important to understand, when should we choose to have one build assembly that captures the entire assembly process for us, and when should we have multiple levels of bombs? So have an assembly within an assembly within an assembly. I'm not going to spend a lot of time in my slide deck today. I hope to spend most of my time in product. One of the things, so when we should do a singular assembly, so when we coach, sometimes we'll get customers who come to us and they basically, they'll have like 6, 7 sub-assemblies built into their finished goods. Meaning I build this component, or, I take these 2 components, I put them together, and then I send it off to, Joey's team. They take that build and they add in some more components put together. And then I send it off to Sandra's team and they take the build from Joey's team and add in some more components, put it together. They send it off, right? So you can see it's kind of like a multi-step BOM process. So when do we choose to record each of those steps and when do we not? Because you don't have to record each of those steps. You can just record all of those steps put together in one finished good. So we kind of think about guidelines on that. Time frame is a big part of it. If you are completing all of those 6 steps by a singular person, first of all, that's a really good key. Maybe we shouldn't have multiple levels of bombs. But also, if you're completing it in a time frame where it will take you longer to update the system for each of these steps, because you're going to have to mark each of those steps completed, it'll take you longer to update the system for each of those steps than it will take you just to, to actually do it. So time frame is a big deal. Inputs are a big deal. If the inputs are going to make this BOM cost more than what it's costing just to do it, right? That's something to consider. Also, if there's no real stop in production, we don't expect Joey's BOM, the level 2, right, of the BOM. We don't expect to ever have a quantity of on hand at Joey's level. It's always going to go from level 1 to level 4. And then at level 4, it might sit there for a little bit before ending up in some kind of finished good. So if we're not expecting to ever have a quantity of on hand at that step, maybe we should not have this have its own step in the bill of materials process. Hopefully that makes sense. When we should do multiple levels of BOM, if there's a longer time frame, right? We're talking about days, weeks, when we're going through these builds. When the sub-assemblies, so it's the step 4 out of the 6-step process, the sub-assemblies are used in multiple finished goods, not just one. And then a good rule of thumb too is if there's an expectation of seeing a trend down in costs over time, then that's a great way to look at multiple BOMs, right? So we can see on step 4, our quantity on hand, our cost of labor when we're building the labor and some of these other stated costs we're going to talk about today has gone down over time at step 4. So Sandra's team, if that was who it was, is doing better. Joey's team, though, their costs have gone up over time. So something is going on. They're not learning and improving in the manufacturing process as we go along. Their learning curve is not happening. So hopefully that gives you some keys. So when we talk about multiple levels of bill of materials, right? So I'm just going to go into QuickBooks now. There's a couple things that are a little bit of, I want to clear up. One of the things is that people say you can only go 5 levels down in bill of materials in QuickBooks. And so this is not the truth. If I wanted to build an assembly, and I have assembly 1, right? And it has this part and this part. And I say, okay. Oops, I have to put in an income account. Love when QuickBooks is smarter than me. It reminds me what I need to do. So I have assembly 1. And then I'm going to duplicate this item, and I'm going to call it assembly 2. And I'm going to change out the parts. We're going to do assembly 1 is going to be in there, and we're going to add in some of this part. Okay. And then we're going to do another one, assembly 3, right? So a lot of times people get confused by this, and they say, oh, well, I can't go down more than 5 levels. And that in here, I can keep adding in multiple levels, right? I could go assembly 2, I could go assembly 100 if I really wanted to. If we had 100 steps in our assembly process, that would be a lot to track. That would be a lot to track. But you can do that. When people say the limitation of QuickBooks is 5 levels of BOMs, what they're actually talking about is the structure of the items list. And it's very similar to the structure of the chart accounts list. So you can see here, right, I've got F is a header, and then I have a sub-item. All these ones are sub-items. Now I can go sub-item of a sub-item, sub-item of a sub-item, keep dragging them out. You can go 5 levels deep here, which is really saying I can have 5 headers deep, right? But it's not actually limiting in how many steps in my bill of materials I can have. You can have as many steps as you want. So I want to clarify that first. Okay. When we are making an assembly, right, the most common things that we'll see in an assembly, in a build assembly, is we'll see components. So other inventory parts, okay, or other assembly parts. Now, taking these, when I build an assembly using other inventory parts, where the value is built up and being pulled from is being pulled from inventory, right? So I'm taking this component, has a value sitting in my inventory. This component has a value sitting in my inventory. And when I build assembly 1, I remove the value being held at the component level, and I push the combined value into the finished good level. So it's a balance sheet movement only. When we're building in stated costs, it doesn't necessarily have to be balance sheet only. Now, most of the time we tell our clients that we should be doing it on a balance sheet or off of a balance sheet, but it doesn't necessarily always have to be that way. So let's talk about an example. So I'm going to go ahead and add a non-inventory part, right? Not inventory, not an inventory assembly. I'm going to add a service item. And when we add in a service item into QuickBooks, okay, so let's just say this is going to be assembly labor, so just really generic. I don't like being really generic in things. I like to be more specific in our items so that we can run reports on them and things like that. But I'm just, for today's purpose, we're going to say assembly labor. So whenever we set up any item in QuickBooks that is not an inventory part, we always want to be checking off this little box here that expands to allow for purchase information and sales information. You would see that box on non-inventory parts, other charges, right? So you'll see them throughout. Always want to check off that box because it gives us, again, more visibility. On the left side over here, we have description on purchase transactions. Now, we're never going to buy this item, or maybe we are if we outsource some of it, but most likely we're not going to buy this item. We're just using this to build in some stated costs, okay? So I'm going to put in assembly labor. And then anytime we're building in stated costs, whether it's a service item, other charge item, non-inventory part, the cost that we suggest putting in is 1. Now, why is that? Because you don't want to put in, what is my cost of who works out on my assembly, on my shop floor, because Sandra might have a different bill rate or a different pay rate than Joey, right? So we don't want to put in here Sandra's labor costs, because that's way too much detail to put in, and plus we don't want to be disclosing people's pay. You might want to get more specific, right, where you have packaging labor assembly, you have painting labor assembly, something like that. You might want to get more specific, but we're still always going to put in the cost of $1, okay? Whether it's a non-inventory part that we're building in for stated costs, an other charge, or a service item. And then this expense account, this is where it can get confusing because it says expense account there. Now you can offset to payroll expenses, okay? So what this would be saying is when I run my payroll, my expense goes up. But when I build my assembly, just like when it pulls out of the component, right, inventory, it does a credit to the component inventory, and it does a debit into finished good. When you do labor, you will be crediting whatever account you put here. So this would lower my expenses if I chose payroll expenses, and it would raise my inventory value if I chose payroll expenses. Okay. Now, most of the time for our clients, what we recommend doing is we recommend creating a WIP labor account. We like to make it a balance sheet account, and the reason for that is because then when you're seeing a balance sheet account, you want to see it hopefully go to 0, right? It really shouldn't hold any balance if we are allocating our assembly labor to the fullest. So I put in my WIP labor account here as an other current asset. And so again, what it's saying here is when I post my payroll, it'll hit WIP labor as a debit, right? Because just as an expense, when you hit an expense, it's a debit. And then when I utilize this labor item in an assembly, it will credit that asset account and push it into the finished good inventory account, okay? Now we're going to look at this now. So on the other side of this, I have my income account. Now, income account, the reason why you have to expand it, right, is you need to have that WIP labor account on the expense side over here. But on the sales side, what I like to do is I like to put it into an account like ask my accountant or do not use or something that's really going to call it out, because really this item should never be used in sales. And if it ever is, I want to see it very loudly when I'm looking at my financials, okay? I also don't put in an assembly, a sales price in there. All right, so I added my one service item. I'm going to go ahead and add in another item. I'll put in a non-inventory part for miscellaneous parts. So again, these would be things that we don't really care to track. We don't really care to keep a quantity on hand of nuts, bolts, screws, whatever it is, but they do have a cost, okay? They do have a cost. So I want to build in some cost in there. So again, if I put in miscellaneous parts down here, the cost, I still suggest using $1. It makes it much easier in our next step. But you can, if in all builds throughout your entire, assembly process, you charge $5 for miscellaneous parts. Every single one finished good will get a $5 charge for miscellaneous parts. You could put $5 in here. But again, I still suggest using it as $1, and I'll show you on the other side how we get to that 5. And then this one, same thing. Sometimes, if it's material enough, we will put them into a, WIP materials account. We will put it other current asset. But most of the time, most of our customers will put this against a cost of goods sold account, right? A materials cost of goods sold. Okay. And again, because it's pretty immaterial. Now this means what you're going to see is when you enter a bill, accounts payable goes up, materials cost of goods sold goes up when I buy these screws. Then, so it's going to hit the P&L at the point of bill. Then when I build my assembly, it's going to subtract off of the P&L and go into an asset. So you have to be aware of that. So that's okay. Again, a lot of our clients, it depends on how truly immaterial it is. And then I'm going to stick this sales side again to ask my accountant, because I should never be selling miscellaneous parts. This is only for build assemblies. All right, so I have 2 parts I'm creating. Now I'm going to go in and make an assembly, okay? So I'm going to just go from step 1. I'm going to do a 1-step, singular step process and do my finished good here. So my finished good, I can come down and I can add in some items. And I'm going to put in a B, and I'm going to let me go to full view. It's a little bit easier. C, and one of these, and a D, one of those, okay? And I have my quantity that I can add in. So quantity 4, quantity 2, 8, 10, 13, whatever it is. So there's all my components. I could add in an assembly in here if I wanted to, right? And then I also can add in my stated cost. So I have my assembly labor, and I have my miscellaneous parts. I'm actually going to take the assembly 2 off of here because we don't have those assembly 2s built since I just made them. So I have here my assembly labor and my miscellaneous parts. Now the cost of these components when it goes into the finished good, because they're inventory parts and they hold an average value, right? They hold a value on hand. At the point of build, it's going to pull the value of that component, of 4 of those components, into the finished good. When it comes to stated costs being built in, this is where the $1 matters so much, because stated costs, what it's going to pull in is it's going to pull in the cost field, so that $1 that I put in there, times the quantity. So if I expect $25 in labor costs per one finished good, right, then it's going to take the cost times the quantity, and that's what the value, that's the value it's going to build in. It's going to take $25 out of that WIP labor account and put $25 into the finished good account per one finished good assembly. Now, one thing to think about with this $25, because we're putting in a stated cost, you don't want to just do, if I pay somebody $25 an hour, you don't want to just put in $25. You want to do the loaded costs, right, for that payroll. You want to do the burden. You want to do maybe some overhead for management. You want to do whatever it is. It should never just be what you pay them. Okay, so $25 in there. Then for our miscellaneous parts, so we talked about we want to add in $5 of cost per one finished good. So there I put my 5, and that's how I get to that $5 of cost. Now I could have left my cost at cost 5 and put in quantity of 1, but it can get complicated down the road if you're trying to do the multiplier later, and I'll show you that in a second here. All right. So now I've created my finished good item. I built in my stated cost, so let's go ahead and see what it looks like. I have to go back and put in my sales account. I always forget to do that. Also to put in a sales price is good to do. All right. So now when I go in and I say I'm going to do a build assembly of my finished good. Now, a couple things that are important to note. Whenever you put in an assembly item, right, it will give you your default assembly. So I have my quantity 25 of labor. I have my quantity 5 of miscellaneous parts in here. Okay. I need more of these guys. Let me go in and receive some of these real quick so that I have enough on hand to do my builds. Okay, I have enough of those to do these builds. Okay, so when I come in here, if I were to want to create one, oh, I also need some of these parts. Quite I need two. Let me do these parts too. Vendor, enter bills. That's what I get for randomly choosing things. Put it in 50. Okay, now that I have all these parts on hand, I can now build 6.5. So let's say I wanted to build just one of these, because I just want to see what's going to happen behind the scenes. So I come in here, I say I want to build one of these. So what it's going to do is it's going to pull quantity 4 of this item, quantity 2 of this item, quantity 8 of this item out of inventory, right, and push into the finished good. So when I say build and close or build a new in here, now let's go back and look at that assembly. Behind the scenes, I can come into my report in my transaction journal, and I can see what does it do. So I can see here, here's my finished good asset. That's the item that's increasing now, which is an inventory asset account. It's debited, it's raised that asset account by $49.62.60. It's lowered, and I could add in here a column for quantity also. It's lowered, so quantity 1 increased of that finished good item. It's lowered by 4 this item, lowered by 2 this item and this value, lowered by 8 this item and this value, etc. We get down to WIP labor, and what does it do? So it's showing that it credited the WIP labor account by $25, and it credited materials cost of goods sold by $5. So exactly what we were talking about. So it allowed us to build in stated costs. Now, the best case scenario, and we're talking about, having multiple levels of bombs, is when we then come in and now it's, a month later, and I'm going to go in and build another finished good. But this time, on my bomb itself, I do make a modification because I'm an enterprise and I can make these modifications on the fly. And so instead of it taking 25 hours, let's say, right, 25, whatever, now it took 20. We're able to lower those costs. So you can make modifications on the fly in these stated, And that allows you to start to see the trend down of costings. Now, if I say build a new on this one, and I go back and I look at it, I look at my report transaction journal, you can see the cost is, well, I don't know if it's lower. I don't remember, but the cost should be lower. Okay, the cost should be pulled down. So we can see that trend of going down. When we go back to the PowerPoint here, see that we are saying that over time, right, our cost should be lowered. Okay, so do we have any questions on building in stated costs? While I wait for these questions, just real quick, I was going to add in there, I've seen this used for many different things. I've also seen this used, for many different things, meaning I've seen it used for machining, I've seen it used for oil costs, I've seen it used for in the printing industry. They don't want to track threads in the printing industry as far as, printing pamphlets and things like that. They don't want to track ink. So they build in stated costs for these immaterial things. They still have, coin on hand of ink, and they show consumptions and stuff like that, but they don't track it on a, literally, ounce by ounce basis of usage. So I've seen it used in a lot of different ways in this assembly process. But hopefully you guys can take away some ideas around this. All right, so there's a question, learn about barcode scanners. Okay, so we can do that in the future as well. I'm curious to see if anybody will be able to build into the stated cost. Oh, so what I was saying is the other thing that is really important that I've seen is now when I go in and I enter my bill, let's just say I use a PEO. I go into my PEO expense and I enter my payroll, right? So I have my payroll expenses, and those are $8,000 for the, but then I also have my WIP labor. So I allocate some of my expenses to that WIP labor account on my payroll. And then when I go to my chart of accounts, in my WIP labor account, right, you can see, here's that $25 from that build, here's the $20 from the secondary build, but there's that $500 in there. And I can track to see, well, I built in $45 worth of cost into my finished good, but I allocated $500. So maybe I don't have enough cost being allocated. I don't have enough stated costs being built in, so I need to readjust that. So this is one of the reasons why we use it in the balance sheets, because then we can make adjustments as necessary and see the trends over time. We do this a lot with labor. Okay. All right, guys. Thanks for bearing with me with my harsh voice today. Coming up next week, we are going to talk about simple inventory cleanup, some of the basic things to get that inventory. If your inventory valuation summary report does not tie out to your balance sheet, we've got problems. It should always be able to tie out to your balance sheet. You should never put journal entries against inventory. So we'll be talking about that. Then multiple vendor price lists, serial numbers, multiple warehouses. I can push the barcode scanners up, Kathy. And then let me just as a reminder, some of the services that Fourlane offers here. And then Vivian, let me get to this. How does the item show on an invoice to a customer? So in the assembly process, so if I were to build that finished good, right, what the customer sees is the customer just sees, let me put in this customer here. The customer just sees finished good. That's all they see, and whatever description I put in there for that finished good, $8,500. When I save this transaction, let me save it back to today. When I save this transaction, the cost that's going to be allocated will be the average cost of that finished good as of the date of the transaction. Right? So if I go in, this is a great report. I look at this report all the time. I have my inventory valuation detail report, and I can customize it to show just items and show only assembly items. So I can see here this finished good assembly, right? The average cost at the point. So I did this build. I built that one. It was 4962. Yeah, so you can see how it lowered there when we did second. I sold it. Here's the invoice. So the cost at the point of that sale was 4962. And then I built another one, 495760. And then if I sold another one at the end, sometime in February, since I'm going in the future, you'll see that too. Then the cost at the point of sale of that one, it was 4957 because I have average cost turned on. Hopefully that helps. All right. I'll hang out here for just a minute if you guys have any other questions. Hope you learned a little bit. Definitely tell your friends about our webinar series, and always let me know if there's something that you guys want me to cover. Thanks, everybody.